Investors didn't love the latest quarter and commentary from Home Depot, but Lowe's has been trading higher after profit in its latest quarter topped expectations, and same-store sales were positive for a second quarter in a row. TJX, as we already touched on, also doing well. That stock, TJX, trading near record highs. Let's bring in Denis Taillefer, portfolio manager at Caldwell Investment Management. Denis, always great to see you. Thanks for joining us. Talk to us about Lowe's. Is this a stock you'd be inclined to buy right now?
Well, it's funny you say that. We don't own it right now. We don't own Home Depot. We haven't been in that space for a while, but the risk reward is starting to look a lot more interesting for that space. The stocks have been under pressure for the last few months. They've come off quite a bit. We think there's still some headwinds ahead of them. Housing affordability. So the whole housing market in the U.S. seems to housing starts, especially for single-family homes, has been slowing down quite a bit. Consumer sentiment has been softening. So there's definitely some headwinds, and that's kind of shown into the stock priced in. But we also think that this basically just creates an opportunity here to really start looking at that sector, because again, the risk reward is starting to look much more appealing here than it has in over the last several months. So we're not there yet, but definitely doing some work to see if this is the right timing to take some exposure there.
It is a bet in part, obviously, on the U.S. housing market. Lower interest rates generally good for housing, obviously.
There's definitely more of a macro event that we kind of need to see happen to see these stocks kind of start to rally again. They will rally ahead of that, but to your point, right? You need probably lower interest rates. You need to see that housing market pick up again, and then as well, consumer confidence to really kind of start creeping up. So again, like we're saying, these are all kind of fairly depressed right now. You've got these stocks that are trading at what we think are fairly attractive multiples. They're very good businesses. Both Lowe's and Home Depot are great businesses, very well run. They dominate that home improvement market. So it's definitely they're definitely good businesses to invest in. And like I said, we're not there today, but we're definitely looking at the two names much closer.
Another name, TJX. It's been a favorite of investors because, of course, they offer off-price clothes, stuff they get from other retailers, and that stock near record highs. Would you be a buyer of TJX right now, Denis?
Well, we own TJX right now, so we have a pretty good position in it. We've always liked the business. It's such a good business model, and to your point, right? It's just they offer really good brands across the board at really good value, and it's everyday value, right? So they basically offer you brands at 20 to 60% discounts that what you would find in an apparel store, a branded store, right? So it's a very good value proposition. They appeal to just about every income demographic. They're gaining a lot of market share within the younger demographics as well, and they're winning market share. So if you look at this company, they've been a serial compounder. They're just basically growing quite a bit. It's mostly organic, and it's just because they're winning market share off of all of the other business models that are just not as strong a business models. So we've always really liked the business model, and TJX is really the best of breed within that space. And they delivered again today, just across the board. Just all of their metrics were just beat in every market, in every segment of their businesses. So they're delivering. It's a really good business model. We still own it. We have it in our momentum fund, and as long as it keeps delivering, we'll go along for the ride.
Metro reporting their numbers. They were plagued by the breakdown of that massive frozen distribution center. It's incredible the scale this thing must operate at. You would prefer Metro right now over Loblaw?
Yeah, if you look at Metro's always been considered kind of the best of breed, so it's always traded at a premium. Over the last few years, Loblaws has outperformed. I think Loblaws has been a little bit better positioned with its low price stores, right? So Metro's got a pretty good exposure there as well, but they are investing to open up more stores in that lower price point for groceries. We still think they're a quality company. They have a very strong bench, very strong management team. But today they're trading at a quite significant discount to Loblaws. So I think Loblaws deserves that premium because they have been performing better, delivering over the last couple of years. But I think the discount is just a little too too deep right now. So there's still some noise to go through Q1 with the issues they've had with this refrigeration system. So I think any kind of sell-off on the next few quarters is basically probably an opportunity to get into Metro or into that space at a much better price point. So I think the risk reward right now just favors Metro over Loblaws.
Well, let's put up a one-year chart for NVIDIA. It's obviously off its highs. It's so vast now. The company is almost become a kind of betting token on the future of AI. Would you be inclined to put money into NVIDIA right now? If it comes off some more, it's definitely on our radar. We have exposure to the whole AI trade. We just don't have it through NVIDIA. We always feel like it's a crowded trade, so we try and look for opportunities where that are not so crowded, where fund flows can kind of push those stocks higher. But we definitely pay very close attention to it. Obviously, their earnings are coming out tonight. We have a really good Q3 earnings season. It really sets up Q4 pretty well. The AI theme is still kind of the main driver of the market, so all eyes are on NVIDIA, and that will really help set the tone for how we're going into Q4. So while we don't own it, and I don't know if we will own it in the near future, we do have exposure to that overall trade, and we're paying very close attention because it will kind of set the tone going forward here. What is your feeling on AI generally, Denis? Are you underweighting it because euphoria can push a group higher and higher?
It certainly can. So I'd say we're probably underweight the overall theme because it's such a big part of the index now in the S&P 500. But we still have a decent weight to the AI trade. Having said that, a lot of the companies we have, the valuations are fairly stretched, but they're the fundamentals are so incredibly strong. Their backlogs are growing. Their earnings year over year are growing at a much faster clip than the rest of the market. So from that perspective, we're fairly comfortable. But the valuations, we understand that any kind of hiccup in the story, there is valuation risk there. So we are paying very close attention. Like I said, tonight, NVIDIA's earnings report will be really help kind of drive how we'll see things going into Q4. So any kind of disappointment, we would expect to see a check back in most of these names. Because again, it's just the valuation risk there is still fairly elevated. So we're very conscious of that. And that's why we're underweight our overall exposure to AI, but we still have some exposure because we do think we're in early innings of that AI build out, and everything we've seen so far from the capital spending is still increasing year over year. So we're fairly comfortable with the companies we own and their earnings profiles.
Thanks very much, Denis. Great hearing from you.